Hello everyone and welcome back to my channel. As I mentioned in one of the previous videos that there is one interesting case, which is the company called Adobe, which reported last week, and the interesting thing about it is that it's a great example of how the company with a great valuation can be disrupted by the new trend, by the AI. And today I'd like to discuss this great valuation versus disruptive sentiment topic, and to try to make some conclusion how to deal with Adobe stock. Last week we had an earnings report, and as always the company triple beat their analyst estimates, so they delivered better revenue, better profit, and they also updated their outlook, their guidance for the next quarter and the next year. And this is the first page of their earnings report, and that they exceed target for full year 2025 and in annual recurring revenue and targets full year 2026 total Adobe ending ARR to grow over 10%. Delivers record operating cash flows of over 10 billion in full year 2025. So to conclude here, not to read it all, they beat all the numbers that were expected by the analysts, and they proved that at least during this year they managed to, let's say, compete with AI, and still the Adobe products are well established and still they've got customers that are willing to pay for their services. So the highlights, the financial highlights for 2025, you can see the numbers here for the revenue and profits, but I'd like you to remember this one, which is total Adobe analyzed recurring revenue, or ARR, exiting the year was 25.20 billion, representing 11.5% year-over-year growth. This one number I was paying attention to. Here, these all pages are taken from the earnings report. Here they say about their targets, and this one is for the full year 2026, and this is for the first quarter of 2026. Always you can find in the earnings report it would be GAAP standard and non-GAAP standard. These are two different accounting standards. From my experience, I see that in the platforms like TradingView, for example, as the default standard, they use non-GAAP. What I'd like to mention here, that looking at the targets for the full year, for the total Adobe ending ARR growth, they expect 10.2% year-over-year. If you remember, I asked you to remember the previous number, which was 11.5%, which was delivered for the 2025. Obviously, they expect the growth in their recurring revenues, but it's gonna be decelerated growth. So this one is taken from the Google Gemini, and I just wanted to highlight this point, that while the annual recurring revenue itself is focused to grow, the rate of that growth is indeed expected to moderate or decelerate from fiscal year 2025 to fiscal year 2026. And yeah, we have a comparison 2025-2026, 10.2. Why I wanted to have a look at the company Adobe? I follow this company. It's a great example of a growth type stock. If you look, and we will have a look later on their all the numbers, their revenue, their profit, their balance sheet, equity, everything is going up and up and up. They are like a perfect example of a growth stock. By the way, the growth stock also means that they don't pay dividend. Usually they invest everything they earned back to their business. So what I wanted to pay attention is that they are continuously buying back their shares, and this is usually a great way to return to their investors by reducing the quantity of their shares. And let's have a look at this again, a highlight that I took from Google Gemini. The company repurchased $11.8 billion worth of stock over the past 12 months. It's a record for the company over a 1-year period. And it's not surprising, for me at least, when we will have a look at the stock price trend. You will see that the stock declined quite significantly for the last year, and when we see that the company makes a record buyback, it usually means that they considering their company is traded extremely cheap and they want to obtain as more shares as possible, and they are proving it with their money. So they are spending or investing back into their company, which for me says quite a lot. So in March 2024, Adobe's board of directors approved a new stock repurchase plan of up to 25 billion through March 14, 2028. And by the way, the Adobe capitalization as of today is about 150 billion US dollars. And this 25 billion represents approximately 17% of the company capitalization. So over the 4 years, their intention was to give back 17% as a buyback. Following its full year 2025 results, the company detailed a 20.31 billion buyback that retired just over 10% of its shares. Again, as we discussed before, the company decided to accelerate their buyback during this specific year when the stock price was low in comparison with what they delivered in terms of results. And here I just presented the visualization of the total common shares outstanding, basically the company's quantity of shares which are publicly listed, and you can see that the trend is downwards. They are reducing their quantity of shares, thus increasing the earnings per share. And let's have a look here as well. As of early December 2025, approximately 4.7 billion in cash remains available for share buyback from the total 25 billion authorization approved by Adobe's board of directors. So here I wanted to pay attention that they still have cash remaining to proceed with the further buybacks. Here, for example, again, these are numbers from the company report. You can see, basically you can track what is their plan, how many shares they are going to repurchase in the nearest future. For example, this is their actual results for this year, and we can see that the latest number, shares used to compute diluted net income per share, was used for 117 million quantity of shares. So this is the last figure, the last number of shares that they've been counting. And when we go to their guidance for the first quarter and for the whole year here, we can see that they already project their earnings based on this quantity, 411 million of shares. So they expect to buy back 6 million shares during the next quarter, and for the whole year the remaining quantity of shares will be 403. So it means they are going to buy back for the rest 3 quarters another 8 million of shares. So they expect to buy back more in the next quarter rather than in the other 3 ones. So it's still kind of accelerated buyback is going on because the stock price seems to be very attractive even for them. As we speak about the company, we also need to know who is leading the company, and I always look at the CEO of the company. So let's familiarize. His name is Shantanu Narayan. He has been with the company for ages. He is an Indian American business executive who has been the chairman, president, and the chief executive officer of Adobe since December 2007. Before this, he was the company's president and chief operating officer since 2005. Can you imagine that he has been with the company for more than 20 years and he has been leading the company for nearly 19 years? And if you look at the company's again, the results, the numbers, the track record, the company was getting better and better each year and under his supervision. So this is definitely a great point. It's we know that the company is in the strong hands and it's managed really on the top level. However, I wanted to mention one point. So if you consider to be an investor of the company, you should think long term, which is 5 years plus. And when we have a look at the age of Mr. Narayan, which is 62 years old now, and most likely that within the 5 years he might retire and it might be another new CEO. I'm sure that they will think about it and will appoint the person who is definitely is going to be appropriate one, but still it might be as a negative catalyst in the near future because it's going to be a major change for the company. Now let's have a look at the stock trend. This is how the company stock was performing during the last almost 10 years. I put it since 2017. And this is where we are now. Basically, the company price at the moment was the same in 2023 and back in 2020. And if we have a look at the company earnings per share and the revenue, the trend, it's been going up and up every year, and definitely what the company earned today and in 2023, it's day and night. And you can see the projections of the analysts, it's still showing a positive trend upwards. And when we speak about the analysts, I also had a look at what they say. So here we've got the average target of $449. Yeah, obviously it has some range from 270 up to 605, but average here would be for 449. And here we can have a look again the names of the analysts and the firm they belong to, and the latest updates were done by them, and average here was $458. You can see the latest 500, 125, 415, 500, 430, 570. So obviously there will be a bit of difference from different analysts, and because they've got different opinions and calculations, but I don't see any number which is less that the company is traded as of today. By the way, now before the market opened is $351. And what I wanted to say at the end as a conclusion, so when we look at the valuation numbers, they are extremely strong because at the moment the price to earnings ratio is 17 and the forward price to earnings ratio is 15. and I speak about this non-GAAP standard. But the historical price to earnings ratio for this company and for the growth technology software companies in general is 35-40. So basically the company is traded like at least 2 times cheaper than its average historical performance. However, while the numbers are really great, the investors are looking for the growth acceleration. And this is what I meant by this ARR, which was delivered 11.5 for this year and is expected to be 10.2% next year. And this is the main concern for the investors, and this is why the company is traded so cheap now, because it could be the similar story as with the company PayPal, which is traded at extremely low values, but it's been traded so low within the last 2 or 3 years, so it can be also time extended process while the investors will make sure that the Adobe is actually not suffering from this AI technology. As the ARR is expected to be at the lowest edge of the double-digit growth, they mentioned 10.2%, I'd like to see the first and second quarters results of 2026. The reason behind it is that you can see that 10.2% is a very lowest edge of the so-called double-digit growth. But if they would deliver slightly less, it would be just a single-digit growth, and it definitely would trigger between the investors a negative sign, and the company would fly down even further. That's why I'd like to see their first and the second quarter results, because they generally, if you track back the history of their reports, they usually deliver better results than it was expected. And if it's gonna happen the same in the first and the second quarter, it will likely be that this 10.2% of expected growth will turn into something more positive. And generally, the company, I'm sure, at the moment trying to be more conservative as they've been before, and they will deliver something better. So I'll see how they will run the first and the second quarters, and if it's gonna be higher than they promised, it will be some more room for so-called safety. One more thesis, that the company is actually always compared with the AI, that is going to be disrupted by AI, and that there is no more room for the software companies in the visual content creation and other production. People forget that while the company has been compared with the AI models and their products, the Adobe is actually implementing the AI into their system as well. They've got their AI technology, which is called Firefly. They also have a partnership with OpenAI. So the company is not trying to fight the AI technology. They are really implementing it into their products, and the company's products are actually getting better. So in my opinion, I have no doubts that the company will execute well for the next X amount of years. I trust again their management. They've proved their performance for years, and I don't see any doubt why should I not trust how they execute. And actually the AI can help them to improve their products. Their earnings report actually prove that their products are still needed, that the revenue is still growing, but we will monitor how the speed of growth will be delivered during the next quarters to make sure that the company is actually going to progress. That was purely my conclusion. and this is what I think about the company. And as always, let me remind you, please do your own research, and if you follow the company closely, I would be glad to hear something from you in the comments, and if you can share your thoughts, I would be grateful. And thanks for watching this video, and please hit the like button and subscribe to my channel if you didn't do so. Thank you.